We invest money in stocks, but we all invest money in stocks here passively. How can you be having billions of dollars in AUM and you are buying shares passively? I wonder if a normal Kenyan, a retail investor buys 2 million shares, 100 shares, 10,000 shares in KCB, and you have billions of money buying KCB shares as a passive investor, do you think that is too wise? Then what is the leverage you have in having so much money? It means you are not using your money as a muscle when you are investing. I challenge us. Our capital market now and our markets have opportunities that are so glaring. But the people with the money must unlock that money to stop being passive investors. I think you are investing for dividends. Dividends is for us as individuals. You guys must not invest for dividends. You must invest for growth. And for you to invest for growth, you must invest to get a seat in the decision making of those companies. Because you have the muscle. And you realize some of these companies, and especially those which have government association in them, they also need your brain to make them grow. Take Berkshire Hathaway. Their biggest money they have made is from where? And I'm still on innovation, guys. I'm still on innovation. Their money is in investing in companies. You know, they are the insurance company, I think, is the second or largest in America. That is their insurance company, not a passive investor. Their insurance company. Then they have hundreds of companies. When Warren Buffett meets his CEOs, he meets them like at this conference. Can you imagine all guys here? Every person is a CEO of a company. Let's say I'm Warren Buffett, I'm saying that. Now I'm speaking to you as CEOs of my companies, all of you. At a point where, how is my Nini doing? Not passive ownership. That is the level we have to go. Every person in Kenya managing money for our capital markets to mature, we must stop this thing of investing passively and invest heavily. And investing heavily includes going to negotiate when you are investing. If, for example, you have 25 billion shillings you want to invest, and you want to invest in Equity Bank, don't go to the market. Why are you going to the market? When are you going to have 25 billion worth of shares buying from the market? Always the banks needs money. Always. You can rest assured. Just have tea with James Mwangi. I mean, some of you may combine forces and form a consortium. Go and have lunch with Mwangi. Tell him we have 25 billion here. We want to invest in your company. They'll create shares for you, and you'll pump in your money, and you'll get a board membership, and you become part of Equity Bank, including growth of it. Am I speaking? I'm an Yogek Swahili. If you look at Berkshire Hathaway, you'll never see they throw money there to chance. If you have the might, which you have in this room, stop kuja kwa market kusubua small shareholders like us. Go and talk to the companies themselves. They create shares. Do you know who is the largest investor in Equity Bank? Anyone with an idea? Fao does know. I'm talking about the investor. Actually, he's the #1 shareholder. Anyone with an idea? Okay. Who is the largest investor in Britain? Anyone with an idea? Britain. Or one of them. Any investor you know in Britain, any shareholder you know within Britain. Yes, sir. Who? Munga Kahara. Yes, an individual. That's good, but I would want to get a fund, a company, so to say, an organization. Yes? Very good. African Invest is a PE fund. Now, did they have to come to the market to buy shares? Did they? You could remember when equity grew, when it actually now started being a local bank. Some of you, do you remember a time where or when Heriot's Capital invested in Equity Bank? Heriot's Capital is also a PE fund. Did they come to the market to buy? They didn't. What I'm trying to say, we all have the money to play in that league in this hall. Let's use our might for the benefit of growth of these companies and the growth of our money. And how do we do it? And why do we do it? If you look at even in terms of individuals and companies who have grown, take a person like Peter Thiel in the US. He invested $500,000 only. $500,000 in Facebook at the early stage. Okay, he sold along the way. If he never sold his equity, he had a 10% in Meta, Facebook. The current value as we talk today, 10% of Facebook would be around 150 billion US dollars. Now, I'm provoking ourselves here. Even as you invest in those assured things, which we may have realized they are not as assured as we think, can't we also have a significant amount of money where we are funding growth companies, antelopes? So that even if you fund in 10 and only 5 works, they give you profit more than all the money you have in T-bills and boats. And don't tell me about law. That's why the regulator is here to tell you laws are dynamic. Take a company called Apple, Simu. There's a guy who was called Mike Makula. I was reading the other day the biography of the former CEO of Apple. Mike Makula at some point, he invested only 250,000 US dollars. By the time Apple was listing, he had a 14% stake. 14. We are talking about a company that has been founded in our generation. If he never sold, he has sold some. He still retains some. That stake could be worth 500 billion US dollars. Even if we invested that money in the best government instrument in the world, let's say he invested 100% of that money and 100 times of it, even to increase the quantum, the gain on this other side is very high. What I'm trying to say is, we must also unlock our money by putting it in anything that can grow. You'd rather than you buy a mango tree, it grows and bears fruits. Anything with life. These static assured instruments have no life. I gave you about BYD. Berkshire Hathaway invested in 2008. It invested 230 million US dollars. It's quite some money for a 10% stake. They sold last year, the final batch. They got 30 times their money. 30 times. Their money increased by 30 times. I'm saying not 30%, 30 times. Yes, as we do all those other things which are assured, can we also focus on something that can grow? That's my point. And in the market, because I would want us to take this point home. Currently, there is a spree of privatizations because, as you know, the government needs all the money that can be gotten. You people in this hall with the money, and you have money for other people, so no one will accuse you of buying a government asset for your own sake. Are you thinking about it? Have you gone through the list of anything that could be sold? Because we saw now the government, you can even give the price and they sell you without even anything much. Go through the list, you tell them, I also want to buy this. What I'm trying to say is, there are many companies you can buy in the market, listed and non-listed. If I had the kind of money you have, we are just sharing. If I had the money you have, I would be controlling Kenyan. Why? I would have checked. Kenyan market capitalization is 60 billion shillings. 60 billion. And it's after this year has gone up by 100% in 1 year. So it was 15. It was 30 billion last year by June. I would have gone, invested in Kenyan. I would be having 2 board seats in Kenyan and driving the growth of Kenyan. Why? Because number one, those things you are calling assured, the dividend alone in Kenyan, the dividend yield is higher than the yield of T-bill. So let's say I don't even need anything else, dividend yield. It compensates for this as a lazy decision of T-bill and T-board. But that's not even the point you'd be investing there. 60 billion shillings is the worth of a company producing over 25, around 2,000 megawatts. The professional in your office could have sampled several other markets. Sample Nigeria. A company like Kenyan. One is called Transcorp, Geregu Power. What do you realize there? Kenyan was 60 billion, producing over 2,000 megawatts. Transcorp, just here in Nigeria, still listed like Kenyan, is worth 200 billion, but producing half of Kenyan. You don't need any other analysis. Just look now at the debt. You realize they have no debt ya kukustua. You look at the assets. You realize they have $500 billion worth of assets. $500 billion worth of assets. But you'll be buying a company for 60 billion shillings. Na saa hii umejifanya hapo mnyenyekevu sana. I am very passionate about these things, so when I talk about them and you see like shouting, is because I need to shout. Hii kampuni tunaitaka Kenya Power. If I had your money, na wekelea na nunua yote. Why? Number one, you buy a utility company. And we are not talking about things that are impossible for the people in this hall. You have the money to buy it tomorrow, yote. You are talking about a company, if you buy it today, you'll pay 29 billion, yote ikue yako. But the profit per annum, the recent one, was 24 billion. I know you think I'm wrong. No, I am right. Have you ever seen such a company? Ati, to buy it today, you'll buy it for 29 billion. And you now be saying, Redia Mashalia, yule owner wa Kenya Power. Yote. Yani anakuangalia anasema, huyu tutawekea stima huyu. On a light note. So, Berkshire Hathaway of Kenya would be doing those kind of things. And you can create, whether you're a pension manager or what, you can create a number of investments that can do that. And you don't put not too much of your portfolio in terms of size, percentage. A small one will do others. You buy a company for 29 billion, which is making for you 24 billion in only 1 year as net profit. And given the inefficiencies of it being run as a parastatal. Can you just imagine? If you bought, you are now running it, you have sufficient board membership, you just go there and say, from tomorrow, this company is no longer buying transformers. We will list people where customers will be buying transformers for themselves directly. You go there because you are controlling it, because you are the Berkshire Hathaway of Kenya by that time. You say, we are the new owners. We are no longer going to be buying polls. We will list poll companies. So if you want a connection, you go buy directly. What do I mean? You will stop now Kenya Power selling to customers a poll at 15,000, which them themselves, they buy at half the price. They'll give you the permission to go and buy it directly. And then you remove all that procurement manenos from Kenya Power. It goes directly to the market. The company becomes so efficient, you will make 50 billion in your first year as the owner. You return all your money in 1 year. And then hingine, unaokota tu for free. I would have gone to the market if I had the kind of money you have. I would be in the market. By the way, currently in Kenya, you don't need to buy a company off the market. All companies off the market are more expensive than the one in the market. That is why a share of Family Bank is more expensive than KCB if you compute. Because they are not listed. They'll be listing, yes. But the shares of unlisted companies now are more expensive because our market has been bearish for a long time. So even when it is bullish for a few months, it is still bearish. I would have gone to a company like Diamond Trust Bank. I would have gone to talk to Aga Khan if I were you. Tell them, we can make a deal. Why? Because this is a company, a bank, a full-fledged bank, a regional bank, not even Kenyan, with core capital of 100 billion shillings. Core capital, or shareholders' funds, over 100 billion shillings. But in the market, you are buying it at that price. That. Their dividend yield is the same money you get from T-bills. Na hizo vitu zote hujahesabu capital gains which you are likely to get. So you go, the same money you are to put to T-bills this month, pereka huko, patafuta the owners, weka huko, pata ka stake ya 10%. The dividend alone will compensate for that other decision. But that's not even the reason you are investing. You'll be investing for the upside of capital gains and the growth of the company. You pump in, let's say, 10 billion there, you get a sizable stake. That money is used to grow and grow and grow the company further and further. And therefore, you're already owning something with life, not the dormant, static investments that are assured. I'm almost finishing. Insights. Innovation. Insights. Every person in this hall is a decision maker. Jeff Bezos usually says that he's very, very stubborn in vision, but flexible in details. A decision maker must be insightful, looking forward, so that you exactly know I'm going there. And your eyes are fixed there. I'm looking at the time. Within 2 minutes, I should be out of here. So, insights. All decision makers who run various companies here, of course, it's your work to set the goals of the company. And there are things we are told since we were in primary school. Set goals, at the smart, specific, measurable. The goals of a CEO or a fund manager must be different now. Of course, you have assets under management as your goal, the threshold. But can we expand further? Can we expand further too? Must we actually all be competitors? How many fund managers do you actually need in Kenya? Fund managers, I mean, I have put everyone who deals with money together. How many do we actually need? We need many, yes. But is it possible we have some few major ones which can colonize other regions? Is that possible? Because when you have so much money at the management, you see, like I usually see at the BlackRock BlackRock announces to open an office in Nairobi. They have not yet opened. It becomes news on Bloomberg. Even thinking they are opening an office in Nairobi. And you are here, no one even reports you. Bloomberg have never known you are here. Because of size and scale. So part of the goal setting is to know, many times even in politics we are trapped, just as in business, in something called prisoner's dilemma. Prisoner's dilemma is an analogy given in prison. Even in areas where people should collaborate. Even when it makes all sense for people to collaborate and talk in one voice. Even after analysis have shown collaboration is better, you still want to finish the other person even before you collaborate. You say, yes, we may collaborate, but let me finish him first. Then a vicious war starts. Vicious war starts, you get finished, all of you. So there are some goal setting that may involve, okay, this guy, we fear them. They are very good in this thing we are doing, and we are competitors. Maybe it makes sense for us to collaborate other than compete. Maybe we can end up making more money, spending less in advertisement and marketing, spending less in cutthroat margin competition. Maybe it's your business to think about that. Lastly, in terms of strategic governance, I will only highlight 2 points there. Of course, being strategic is your business. Strategic, thinking macro. There are some things you must not delegate, even as the boss. The sequence I talked about. Because the person you have employed in your office is a fresh graduate. They have worked for 2 years. It's your business to know there was a financial crisis in 2008, and there was a tech bubble a few years before that, and it's your business to know we are likely to get one soon. That sequencing saves you a lot of investing money. There is something I am mentioning Berkshire Hathaway a lot because I read about them, Charlie Munger and Warren Buffett. I read about them a lot. So around 2007, 2008, how was it? They had piled billions and billions of dollars. And the market was deriding them. The markets thought they were so clever, the markets. And this was theirs, how I live. So the guys who are piling money, they could go to AGM. The guys rise up, they could seek for a chance to speak. Why are you putting so much money in cash? Why can't you invest in this and that? They were not being pushed. So they had already done the analysis given the previous years, and they knew somewhere here from 2006 they were already piling money. But you are piling money when the market is so bullish, because the crash always comes after a bullish market. There is no crash when there is a bear market. Crash only comes when it is bullish. So it means you are already losing some opportunity cost. And the people would wonder, why are you not investing? The shares are going up too much. 2007, 2008, the market crashed. Those who was took up companies for free. They were being begged. A bank like Bank of America, which had to merge with Merrill Lynch, they were begging Wazee. Do you know why they were begging them? Just to invest even $1, because the market would have confidence by Warren Buffett investing even $1 in them. So they invested, got huge stakes in many companies. They walikuwa nazifagia hivi. So that strategic decision making have to be with the bosses of the firms who are here. Even those guys, they never, if you go to the Berkshire Hathaway's office, they don't have actually any expert. Those two others used to be the experts. One is late. The other one is actually, I think he retired this December. Work on a 12 staff. Company worth more than $1 trillion US, with more than 200 companies. I'm not saying you get sacked, you guys, What I'm saying is that the owners of the companies, the leaders, they have their role to play in strategic decision making. Last one is emulation. There is something I've seen economists and also companies. Emulation is, me as a small-time shareholder, I don't need to look at global trends. I see what Warren Buffett is saying, what Ray Dalio is saying about global markets. And then I polish up. Nawekelea tu yangu kidogo na paka rangi. So najua dunia inaenda hivi economically. Because they have money more than me to invest in in quotes R&D, in their formulations of whatever they need to know the predictions. So some of the money you spend, you don't need actually to spend, you emulate. Even economists do that. For Kenya to grow, we don't just wake up and say, we want a Kenyan model. No. We can look at models that may work, that are close by. Either in a car kama Kenya. So that you don't have to experiment too much. For example, one experimentation I'll never do, people in this hall. From today, I would go and take stakes in the NSC without thinking. Why? Because there is no way you are going to get a cheaper company outside than inside the market. Because the market has been bearish. And it's a buyer's market. When it's a buyer's market, why are you looking to buy something outside? Do you know why I'm saying it's a buyer's market as I finish? Some people are asking me, tell us, wewe unanunua KPC? Nimeulizwa na watu wengi hivyo sana. Unanunua zia pipeline? I can't tell you what to do. Because markets, even your own stockbroker cannot tell you what to buy. Because they can tell you in good faith and then the markets misbehaves. Because the markets are not just fundamental. But I want you to take on this. I'm just trying to make a point on why listed companies are so cheap. Let me use Kenya Pipeline. It's not yet listed. Iweke hapa. Do you know anyone with an idea it's valued at how much? At the IPO valuation. The whole company. Even if si mnaweza gogo hata nyinyi saa ingine mnaniangusha kiasi. How much? 160 what? Just Google. There's a point I want us to make. Nataka to make collectively. Madam Director, please come help me. There's a point I want to demonstrate. Nataka evidence. Nataka kukuwe na witness. Haya. Andika Kenya KPC. Hata nyi andikeni. I want you to refer, this is my last point anyway. Ya mwisho simuandike tu tafadhali hata kama. You know nowadays tunasemanga iko YouTube, I'll go to rewatch. But there's a point I want us to make so that we can use it. Do you know what I want us guys? There are low-lying fruits in the NSC. Let's exhaust them as a country so that we start thinking. You know why? Me, I can't think. You tell me, start a new company. Why do I need to start a new company when I'm getting cheap companies in the NSC? Why? So, companies grow when you exhaust low-lying fruits. China grew by first exhausting labor. Labor was so abundant. So, because it was almost free to employ people, labor-intensive industries, low-lying fruits, unamalizana. After you finish, you go to skill-based. They went to skill-based. Wakamalizana. Because of barriers of entry also. Capital-intensive because they now were having some money. So you broke other people based on the might of capital you have. Then you grow. Then you plow back the same process from this capital to become technology-intensive. So if the economy grows by picking low-lying fruits, even us here in Kenya will grow by first of all picking low-lying fruits. Tumalizane nazo. The low-lying fruit in Kenya now is the NSC. For you guys seated here. Not passive. Become huge participants. Huge. Why are we having World Bank investing money in our private companies when you are oversubscribing our T-bills? How? KPC. Na nataka tuulizane maswali. So you can use Google also. 163. Make a column. Moja uweke valuation. The first column, call it valuation. The second column, call it profit. And the last column, call it PE ratio. It's the simplest way of measuring an investment. It must not be a jargon in this. It can be a jargon elsewhere, but not here. PE ratio, price over earning ratio. And the other way to measure PE ratio is net profit, capitalization divided by net profit. That's the other way of measuring PE ratio. Haya, Madam Director, kuja ukue kama witness. Na hii tunafanya wote. So that you go make your own judgment. Because I don't want to talk about whether to buy or not. Because I'm a politician, but on the other side, I'm an investor. So I may, and as a politician, I have a different view from the one I have as an investor. So that's why I can't tell you. I am going to give you the analysis. Higher. Mumeweka column 1, 163. 163.6. That is the valuation. So, shares, you don't look at the share price. That's something I always see when I tell somebody, oh, buy DTB. Hey, share inatoka 115. Nitanunua hii, ingine inatoka 3 shillings. But you have not even looked at how many shares are listed. You know, capitalization is the price times the number of shares listed. So don't just look at the price. When you're evaluating a company, look at it like you are buying the whole of it. Because a share is a proportion of that company. Higher. The reason I'll be using these 4 companies, I'll use 4, is because when Kenya Pipeline is listed, it will be under a segment called energy segment in the NSC. NSC kuna na segments. Automobiles, agriculture, banking, insurance, kuna energy. So kwa hiyo energy, itakuwa hii, ikikuwa listed. The second one will be umeme ya Uganda. The other one will be Kenya Power. The other one will be Kenyan. And the other one will be Total. So I'll not use umeme. I'll use the Kenyan ones. Higher. KPC tumeandika 163.6. What is their last profit? We will not take the last. We will take the highest. The last is not the highest. The highest they have ever made, according to the books I've seen, is 12 billion bottom line. That's the highest profit they have ever made. Last year was lesser. Yes, 12 is the highest they have ever made. What I have seen in the books. But of course, those people who've been in the market know the dynamics. They are not likely to. I am waiting to see half-year results. I am certain they will release half-year results of around 10 because there is an IPO. Just write somewhere, because some of these things I'm saying is the predictions we do in the market when even you do them. I'm sure they will release the first half, quarter was around 5. The second half, quarter was around 5. So, but I don't want us to use there. I want us to use 12. But I'm just telling you, when there is an IPO, part of that IPO comes with, lazima upake kampuni rangi kiasi. So they are likely to announce half-year profit of 10. And they are actually also likely to be oversubscribed. Because the share, it started the IPO on 17th. If they stopped on 17th evening, it was already oversubscribed. Not by Kenyans. The allocation done on the paper. I'm telling you the facts. Just look at the results after the announcement. Most all companies will have been made to buy the shares. Not that they will have both, they will have been made. Just look at, you know, when you live in Kenya, you don't struggle to see threads. I can tell you from Kenya, the second investor will be a Ugandan, but that Ugandan will be Kenyan. Si result iko in a month's time, utaniambia. You can be assured the biggest applicants in terms of quantum will be all marketers. Some who you have never known, they are actually all marketers. But the number 2 from Kenya will be Ugandan. Another line, it will be a Kenyan Ugandan. And it will be a company. Okay. Wacha tusiongee siasa leo. Kenya Power. Valuation. Just Google there. Saki kutumia my words. Just go, somebody to Google for me, Kenya Power market cap today. You know market cap, I hope you know market cap. The valuation of the company using the share prices. That's why you heard me talk about this Safaricom issue the other day, because it is just too grossly incompetent to talk about markets. And you will see just now, when you are valuing a company and selling a big stake. Somebody go for me, Kenya Power market cap. Yeah? 28. Decimal wata tuache. 28. Can you go for me there? Kenya Power profits in 2025. In 2020, the recent one is 2020. Yes, 2025, because they end their financial year in June. Just Google for me. I want you to, and please write. And I'm saying this because even this whole, I've already been asked by somebody, do I buy this share? No, I want you to do it for yourself, right? 24B. Hata tuachane na decimal points. So, how do you calculate P ratio ndio tuende tukimaliza yote? This is P ratio. You can just do valuation divide by earnings, which is net. So hii ya kwanza divide 164 divide by 12. I've used the highest. Ile wametumia juzi is even lower. 164 divide by 12. 13.6. That's the highest ever. I'm reminding you, I'm not using the, ile walitumia ni lower. It's like half of this. It's 13, yes. Hiyo ya kwanza tumepata 13 P ratio. Haya, power. Divide 28 divide by 24. No, 1.2. Haya. Kenyan, listen here. Kenyan is one of the best dividend payers because they pay 75% of their earnings. But I don't want us to focus on dividends. We focus on the company. Can you Google for me market cap of Kenyan? It's around 63 billion. Weka 63. Google for me Kenyan profit 2025. It's around 10. But Google. 10.5. Higher. Divide for me 63 divide by 10.5. Na muandike pahali. Hii kitu nataka muende nayo nyumbani. 6. Let's go to Total Kenya. The market cap should be around 6.7. But check. Should be 6.7, but check. Total Kenya market cap. Total Energies. Market cap. It's around 6.7, I'm sure. Anyone who has gotten? Yeah, 6.7. Higher profit, just check Total Kenya half year profit 2025. Half year. juu ndio imetoka. Fully itatoka maybe next month. Must be about 1.1? 1.1. So times 2? 2.2. So 2.2. Divide 6.7 divide by 2.2. 3. 3, eh? Madam Director, I request, for this question I'm going to ask the company to give just a gift, if hata kama ni hikabukure, to the person who will answer. Anything, just to remember. Can anyone from the audience who was writing, please, just come and tell me what you have, after writing, what comes to your mind? You don't come, even, you can say it there. Yes, there's a lady here. Let's get like 2. And any other? After writing, what comes to your mind after you write?
For me, I think I would buy Kenya Power.
Please rise,
okay.
So that you help us.
I'd put a lot of my money in Kenya Power. The reason being, it would only take me 1 year to recover my money. But for KPC, it would take me approximately 14 years to recover my investment.
Makofi tafadhali. I am happy to know that people are listening. Any other person? Even if you repeat what you have, in other words. You know mtu anasema, you know you guys, unaona kabuka mtu anasema, just to add on to that. Yes.
Hata siwezi anguka mtihani, I repeat the previous speaker's sentiments.
Can also somebody tell us about even the others? You have mentioned the 2 extremes. You can mention what you have learned about the others. Anyone who wrote that graph, what you have learned and what comes to your mind? As if, Iko, my brother there. My brother there. I want 2 people and somebody else, wa mwisho. Just 2 people. This is part of reinforcing the lesson. The last person in nani? If you get a lady, my brother there. Very last, a lady. There is a lady next there. Okay, let's go. And you can write so that other people may have attention. Unaamuka tu ukisema.
The P ratio 13.6 for Kenya Pipeline does present a risk of overvaluation. It could be overpriced. So there's that risk element that maybe the share price could be overvalued. And that's my take on that.
Okay, my take on this, Total is 4 times better than KPC.
Thank you. What I gather is that the listed companies appear better value for money. KPC, not as good as the listed companies. Thank you.
Any other person? Thank you very much. Let's clap for them. Please, you may sit. Hata nikimalizia hapo, nimesema kitu. Si nimenyamaza tu. So what I mean, many times we rely on people, on professionals to guide our money. But some of the decisions we need to make when you are investing are too. Can you just imagine you never read in a book? They are too close by. You just went on your phone and all the relevant information you needed, you have it. So Markets also have other things. You may not know what has been hidden there. So that's why it's difficult to tell somebody. As a politician, I may talk, but this is not the forum. But as an investor, you have talked. You get what I mean? So, and in all the other, when you go to banking, you look at something called core capital versus the valuation. That's how you value. When you're buying a bank stock, you look at the core capital or shareholders' funds, because core capital applies to the bank, which is only operating in Kenya. But most of the Kenyan banks are operating regionally, and they have subsidiaries. So shareholders' funds also captures subsidiaries. You know, core capital is a statutory requirement to list. But shareholders' funds also now incorporates whether you are a bank, the Ugandan one, the Tanzanian one, and the rest. So always look at the percentage between the valuation and the core capital. As I finish, very lastly, I also want to plead to Kenyans, and I want to plead to the government. When we give our considered opinion, we are giving it for Kenya to benefit. I still hold, because the truth, you cannot rub it. The truth will remain to be the truth. The valuation of Safaricom at 34 shillings is grossly undervalued, as we have seen in our computation here today. We have seen here that Kenya Power is valued at 28 billion. Even at that double that, which is 56 billion. Do we think government can sell Kenya Power for 56 billion? They can't. Yet it's double price of what the market is trading. So I'm also appealing that all of us, let us purpose to put up Safaricom transaction in an international bid. Because people will compete for our shares, which is a 15% stake. And you can be guaranteed the 2 or 4 billion we are getting, we are going to get more than 350 billion from other people bidding for Safaricom shares. Because our market has been undervalued. And when it is undervalued, it is not the right parameter to measure the share you own. It is the right one to measure the share you want to buy, not the share you want to sell. And you have seen in the market, yesterday night, you saw that Nedbank from South Africa is buying NCBA. It is buying NCBA at a price of around 102 shillings because it's 1.24 to book value. It's about 1.4 to book value. So the share was trading at below 70 before any news of a takeover came up. But now the company, in terms of the valuation at which Nedbank is buying NCBA, is more than 50% of that price. Meaning the market was not valuing NCBA the way it ought. And that's why there is already a transaction of the market at a much higher price. There is a transaction happening in Kenya now of a company called EABL. The IGO is selling to Asahi of Japan. The share price today, as you can check on the internet, of EABL is 244 shillings. 244. Yet, the IGO and Asahi, they are transacting the same share at 590 shillings. 590. How can we then be so incompetent as a Kenya that we are selling up our government assets based on market price? The idea is not basing on market price. Nedbank is not basing on market price. Why should Safaricom be based on market price? Then you lose up value. I think when we say these things, it's not politics. It is about Kenya getting an extra 150 billion to build more roads to prosper Kenya and our systems. The very last thing I want to announce to all of you here is, my brothers and sisters, what we did in Keharo in terms of launching a program of learners paying 500 shillings per term. It is the journey towards totally free basic education in Kenya. And we are going to make it happen. And we want to start with day secondary schools. And I'm not throwing this to anyone to do it. I will also be part of doing it. And I'm requesting a very simple formula. Instead of me doing this program in Kiharu, and another one doing it in their constituency, and the discrepancies between this and the other one in terms of constituencies, my proposal is simple. And we'll do it, and I can assure you, I'll be the champion of this until it is done. CDF at Nairobi level, even before it comes to Kiharu, every constituency must be cut 30 million Kenya shillings, which will amount to 10 billion Kenya shillings nationally. We put that money into a kitty we are going to call day secondary school kitty. The governors in the equitable share to also contribute 10 billion Kenya shillings. Even before it reaches, the treasury should deduct the 10 billion. The national government, and especially the Ministry of Education, to also rearrange their budget and raise an extra 10 billion Kenya shillings. We put that money into a kitty of day school. Kenya requires only 30 billion shillings to make day secondary school education free and totally free, including lunch. And Kenya must start that journey today, not tomorrow. We must never use basic education ever again as a tool anywhere in the election period. The day secondary school and basic education must be made free. And by the way, my goal is for us to have free basic education from term 2 of 2026. Because education, in all economic models, education is the #1 parameter of an economy, for economy to grow. It brings R&D, it brings technology, it brings about skills. We must make this available to all Kenyans. And I can guarantee you, whether I'll be alone as a member of parliament, I'll do it and it will happen. Thank you very much.
What risk is? Because I used to think infrastructure bonds were risk-free until you talked about Ghana. And then the question of passive versus ownership, yes, as a big principle. I think that's what I would say really landed with me. I think the question I have is, in this ownership journey, you've just taught us part of owning, we're actually owning the wrong things. How do we manage that risk of saying I own quells, I own these? How do trustees build their capability to truly own what they should be owning? Because there is that bigger risk of, yes, passive. I would rather passive because somebody else is doing it for me, rather than if I do that. The second one, and it's very quick, economic growth versus economic development. Yes. I think that's something you could tell us a little bit, because we think more growth rather than development. And my last thing is, who are you? Because entrepreneur, economist, member of parliament, actually, but who are you?
Anyone else can take one more question? Not from the media, just from the delegates. Anyone? It's not media time. Good.
Hi everyone. My name is Morgan Banda, representing the Coca-Cola Provident Fund. And Honorable Ndindi Nyoro, we really want to appreciate you. Some of us have grown knowing you, but now we are your close followers because of what you are really enlightening the economy. So my question is, what was the rationale behind your proposal that Safaricom be split into 3? I know from where you stand, you are opposed to the sale of Safaricom shares to Vodafone, but I just want to understand your logic. The CS for Treasury and Economic Planning yesterday was saying that he doesn't understand where you got your valuation. Yet, I think we have just done some valuation here, and I think from your point of view, it's like Safaricom is undervalued compared to other global players.
Thank you. Shimiwa.
Thank you very much. I'll be quick. My brother, please remind me your name.
My name is Paul Kasimu from Minet, but previously Safaricom.
I thought so. Thank you very much, Paul. In terms of ownership and the assurances, to call it that way, what we called risk before, I think it's now clear that there is nothing totally risk-free. It's nothing like that. It may take long, but it catches up with you. But on the other side, in terms of ownership, what I'm emphasizing on, the markets are not always the way they are. Let's underline that. So you may not call me here in the next 2 years and I say the same speech. Because the markets change. What do I mean? Currently, Kenya is very bearish. That's why for me, any company you are buying listed, majority of them are underpriced. Warren Buffett usually says that he does not look at share prices. Once he invests in a company, he doesn't care to look at the share price tomorrow or the next year, because he already made the right decision at the buying price, at the entry level. And always remember, you don't make profit at the point of sale. You make profit at the point of purchase. Any money you make, you don't make money because you are selling something. You make money because you got it cheap. So all I'm saying is that Kenya, if you compare the Kenyan market, Nigerian market, JSC, Johannesburg, and then you compare with non-listed companies, the listed companies in Kenya are grossly cheap. And the more the reason, just imagine, Paul, these are guys from Japan with sophisticated professionals. They want to buy a company in Kenya. They go to the market and the company is trading it today. That time it was cheaper. It went up after the announcement. But today, after going up, the share price is 244. But they are paying. They have committed to pay 590 for the same share. There are not two shares at Class A and B, same share that is trading at 244 in the market. Asahi is buying the same share of the market in quotes for 590. Then it shows you the shares in the market are grossly undervalued, and the people who hold big stakes meaning they don't hold to trade, those people can't sell at the market prices. And if you look at the banks in Kenya, you see NCBA is being bought at 1.4 to book value. There is no indigenous Kenyan bank trading above 1 to book value. This is what that jargon means. Banks you value at core capital and the market valuation. So you either get a premium or a discount. So the base is usually 1. 1 is the book value. 1 is a figure. So if it goes below 1, it means it is trading at a discount. Equity Bank is 0.75. KCB is below 0.6. DTB is 0.32 to book value. But NCBA is being bought at 1.4 to book value. It shows you Netbank. Netbank is a 1 trillion bank listed in the JSC. They are willing to pay like double price the last 6 months price of NCBA, double price. Because they know the market is not a true reflection of the value of NCBA or Safaricom or any other share. I hope you get that. In terms of ownership, Paul, what you are calling passive, you know what passive means? Passive is just like unleashing your cow to go and graze with the hope it will come back to you in the evening. Just hope. You've unleashed your cow. No one is looking after it. With the hope, it knows home. So the person with the money now has here, I don't think I think they can go the step higher. Since you have the money, instead of owning companies number 1 to 20, you have 20 shares. You have 2 million for Equity, 1.5 million shares for KCB. You have 2 million for Kenya Power, 500,000 for Kenyan. When you are eating everything, the buffet, it means you actually don't know your favorite food. Then if you grade your investment options from number 1, NSE has around 60 listed companies that are active. If you grade 30 of them from number 1 to 30, you grade them. This is number 1, like the one we graded today. You can clearly see out of the energy sector, which is number 1. And I don't need to tell you, you saw, you calculated yourself. So if you grade number 1 to 30, these are the best investments you have in Kenya. Paul, what would you be doing with number 23? Now you have nothing to do with number 8 even. You actually have nothing to do with number 7. Deal with the top 3. Ufukie hapo. Unless you have doubts about your capability to analyze. Economic growth, development. Mostly growth is more broad. Development, we call it, it's more tangibles. Development is more tangibles. Building things, investing in programs, but growth is what manifests after development. Who am I? Me. but I can say I enjoy what I do in terms of leadership a lot, but I've seen, Paul, it is self-reinforcing. They feed into the other. I love the kind of discussions we are having. You forgive me, I've taken more time. I don't even know we have taken more time. Because I enjoy really this kind of discussions. Even in the evening. Wado tutatafutana jioni tukae pahali tuogee tu mambo ya investments. For me, that is holiday, not swimming. So it is self-reinforcing. You realize in leadership, you also need this other knowledge about investments. But also in investments, you realize you also need to know the macros. So they are self-reinforcing, and actually each pivots the other. Morgan from Coke, Provident Fund. Thank you very much for the compliments. The reason for Safaricom spirit is simple for me. We have seen globally in many companies. When you have a company that has related segments, the total of the parts is usually more than the whole in terms of valuation. Remember, if you split it into 3, you have Safaricom as a telco, operating individually as a telco. Fintech, call it M-Pesa, it's already there. Safaricom already leases some of the towers from other people. But they also have built so many towers on their own, just the same way they have done in Ethiopia. If you just let the tower company be, any other person who wants to host something on the Safaricom tower will be paying to be hosted. So the company will grow on its own by also leveraging on other customers, not just doing it specifically for Safaricom. But lastly, I had 2 options. That is, one, splitting fast, it may take time. The government needs money yesterday, as you can see the urgency. So the simpler one, to get more money within a shorter time, list Safaricom in the London Stock Exchange. It will not take you long, list it there. So people will come to know, so the owner of M-Pesa is called Safaricom, because M-Pesa is known more than Safaricom. So in this second option, there is no splitting. Just list the group in the LSE. So people will take note of Safaricom, companies, telcos, Orange, Etisalat, Bharti Airtel, any other will take note. After taking note, then announce an international bid for anyone interested in the 15% stake. Announce it to the public internationally. So you'll have guys competing. This one competing to buy for this price, this other one, this price. It has happened. I gave it on TV the other day, 2013. There was a company called Reavipingo. I had shares in that company, a few. So we bought at 27.5. Na sio story ya kusoma kwa kitabu, real. So after buying a 27.5, the owners of Vipingo, hii shamba iko hapa inaitwa Vipingo, it was part of it. It was a Saiso company. So the owners came and decided, we want to buy these guys out. Kampuni kwe yetu. So they gave us a bid of 40 bob. Me, I had some, I think 10,000 shares. So nilikuwa nafanya hesabu. So I bought it at 275,000. These guys want to pay us 400,000. So watuitishe namba ya M-Pesa watume haraka haraka. Because I thought that was very good. A 45% upside. But Chris Kirubi na Centum, wakaenda CMA, wakasema no way. By that time, Centum had like 1% of Rare Vipingo. Wakasema hata sisi ni shareholders. We also want to bid, to buy even you. Who wants to buy us? CMA wakakubali, the bid was opened. Centum put up a bid of 50 bob. Hey, I thought, honestly in my mind I was thinking, Chris Kirobe bana siache hii mambo mengi. Tupewe pesa mtu afunge zake. Within 2 weeks, some other guys put up a bid of 55. Then it became a bidding war. The long and short of it, after 2 months of bidding, we pocketed 85 bob for the share. So my 275,000, I pocketed 850,000 because of one thing, competitive bidding. So that's all we are asking. I don't think it is too much to ask. Even the guys in government, national treasury, it's not too much to ask. Put Safaricom stake in an international bid, Kenya will get much more money. Thank you very much.
Asante sana.